In today's midday trading, the stock market saw a significant resurgence in meme stocks, fueled by the unexpected return of Roaring Kitty, a notable figure in the online trading community who posted for the first time in almost 3 years. GameStop led the way with an extraordinary surge of around 60%. This sharp increase came as a welcome boost to investors who have remained loyal to the stock despite its volatile history. AMC Entertainment followed closely with a 32% jump. The surge in AMC stock is particularly notable given that the movie theater chain completed a $250 million stock sale during Monday's volatile trading session. The successful capital raise demonstrates strong investor confidence in AMC's future prospects, even amid the highly fluctuating market conditions. The excitement extended to other meme stocks as well. BlackBerry, a company that was once a dominant force in the smartphone industry, saw its shares rise by 11.9%. This increase highlights a renewed interest in BlackBerry's evolving business model, which now focuses more on cybersecurity and software solutions. Koss Corporation, a manufacturer of headphones, experienced an even more dramatic rise, with shares shooting up more than 40%. The surge in Koss stock underscores the speculative nature of meme stocks, driven largely by retail investor enthusiasm rather than traditional financial metrics. However, not all news was positive. Alibaba, the Chinese technology conglomerate, faced a significant setback. The company's shares dropped 6% after it reported an 86% decline in net income for its fiscal fourth quarter compared to the previous year. This sharp decrease in profitability overshadowed the fact that Alibaba had exceeded revenue expectations, bringing in substantial sales. The decline in net income raises concerns about Alibaba's cost management and profit margins amid a challenging economic environment in China. Sony experienced a favorable market reaction, with its U.S.-listed shares climbing 6.7%. The electronics and entertainment giant reported quarterly revenue of 3.5 trillion yen, surpassing the consensus expectation of 2.89 trillion yen from analysts polled by LSEG. Despite this revenue beat, Sony's operating profits were lower than analysts had anticipated, suggesting that the company is facing some operational challenges. Nevertheless, the strong revenue performance reflects robust demand across Sony's diverse portfolio of products and services, from gaming consoles to entertainment content. Vodafone saw its U.S. shares rise by 4.8% following the announcement of its full-year profit, which beat market expectations. The UK-based telecommunications company's performance underscores its effective cost management strategies and resilience in a competitive market. Vodafone's positive results are a testament to its ability to navigate regulatory challenges and intense competition, especially in the European and African markets where it has a significant presence. On holding, the Swiss performance sportswear company experienced a remarkable 18.3% jump in its stock price after reporting first-quarter earnings that far exceeded analysts' expectations. This significant gain marked the company's best trading day since March 2023. On Holding's impressive results highlight the growing popularity of its innovative athletic footwear and apparel, which continue to gain traction in the competitive sportswear market. United Airlines saw a modest 1.3% rise in its share price, buoyed by strong expectations for summer travel. The airline announced that it expects to have its busiest Memorial Day period on record, with a projected 10% increase in travelers compared to the same period last year. This optimistic forecast indicates a robust recovery in the travel and tourism sector as pandemic-related restrictions continue to ease. United Airlines' positive outlook reflects increasing consumer confidence and pent-up demand for travel experiences. Newell Brands enjoyed a 5.7% rally in its stock after Barclays upgraded its rating from underweight to equal weight. The upgrade was based on the firm's assessment that Newell's business operations are closer to normalizing following a surge in demand during the pandemic. The stabilization of supply chains and a return to more predictable consumer behavior have bolstered investor confidence in Newell's long-term growth prospects. Roblox, the popular video game developer, saw its shares rise by 2.3%, providing some relief in an otherwise difficult month. The stock had fallen more than 9% in May after the company retracted its forward guidance, leading to investor uncertainty. Additionally, Roth Capital downgraded Roblox from buy to neutral, reflecting cautious sentiment amid ongoing uncertainties about the company's growth trajectory and financial performance. Despite these challenges, the slight uptick in shares suggests some investors remain optimistic about Roblox's potential in the rapidly expanding gaming and metaverse markets. Boston Beer Company experienced a slight increase of 0.3% in its shares after an upgrade from Jefferies, which moved its rating from hold to buy. Jefferies highlighted positive trends in the sales of flavored malt beverages and ready-to-drink cocktails, as well as the dominance of twisted tea in the growing hard teas market. These factors contributed to a favorable outlook for the company, which is well-positioned to capitalize on changing consumer preferences towards innovative alcoholic beverages. Planet Fitness saw a 0.4% gain following an upgrade from JP Morgan, which raised its rating from neutral to overweight. JP Morgan cited increased confidence in Planet Fitness's long-term growth outlook, driven by the company's strategic expansion plans and resilience in the fitness industry. Planet Fitness's affordable pricing model and extensive network of gyms continue to attract a broad base of consumers, supporting its growth ambitions. Lastly, Stellantis's shares climbed 2.9% after announcing a strategic partnership with Chinese electric vehicle manufacturer Leapmotor. The joint venture aims to aggressively expand electric vehicle sales outside the U.S., leveraging Stellantis's extensive distribution networks, particularly in Europe. This move is part of Stellantis's broader strategy to enhance its presence in the rapidly growing electric vehicle market. The partnership with Leapmotor is expected to accelerate Stellantis's transition towards sustainable mobility solutions and strengthen its competitive edge in the global automotive industry.